there is something dramatic happening with Elon Musk. His standing in the public conscious is changing, and it's happening right in front of our very eyes. And so when you read stories about Elon Musk, try to step back from them and understand what they're saying in the broader sense, is that this great showman to some, this great charlatan to many, the public perception is shifting more from showman gently at first towards charlatan. And I think that's such a huge symbol for the shift in the times we're seeing.
Imagine spending an hour with the world's greatest traders. Imagine learning from their experiences, their successes, and their failures. Imagine no more. Welcome to Top Traders Unplugged, the place where you can learn from the best hedge fund managers in the world so you can take your manager, due diligence, or investment career to the next level. Before we begin today's conversation, remember to keep two things in mind. All the discussion we'll have about investment performance is about the past, and past performance does not guarantee or even infer anything about future performance. Also understand that there's a significant risk of financial loss with all investment strategies, and you need to request and understand the specific risks from the investment manager about their product before you make investment decisions. Here's your host, veteran hedge fund manager Niels Kaastrup Larsen.
A new global order is becoming clearer by the day, and in our Global Macro series, I, along with my co-host, Jem Kazang, want to dig deep into the minds of some of the most prominent experts to help us better understand what this new global macro-driven world will look like. We want to explore their perspectives on a host of important issues and hopefully dig out nuances in their work through meaningful conversations. Our guest today is one of my own favorite podcast hosts, whose Rolodex is out of this world, which you can tell by the people he's able to speak to. So please enjoy our conversation with the man who makes you go, Grant Williams. Grant, welcome, and thank you so much for joining Jem and I today for what I'm sure will be a passionate and fun conversation as part of our Global Macro series. Now, I first came across your work when you were doing these amazing video conversations where you would go out and spend a day or two with a guest in their surroundings. And I can share with you that your trip to see Neil Howe and your conversation while walking past all the memorials in Washington, D.C. inspired me to take my own family to do the same after I'd asked them to watch your video, of course. And since you launched your own platform, of course, I have been a subscriber to your amazing work. And I'm very inspired, actually, by the quality in all of the things you put out. So thank you for doing what you do, and welcome to our podcast.
Well, that's incredibly kind of you, Niels. Thank you. I really appreciate that. It's that conversation with Neil, really stuck with me too. Just to be able to talk about the things that Neil talks about, with demography and this idea of the fourth turning, and to be able to have that conversation surrounded by so many reminders of just how those things have played out in history. I think it was important, particularly at a time when it's kind of, if you've read the book by Neil and Bill Strauss, and if you haven't, I can't recommend it highly enough. You're familiar with the concepts of turnings, and of course the fourth turning being the most traumatic and volatile of the four. And here we are in the middle of one on a calendar basis. But as I say, to be surrounded by reminders, war memorials of past periods in history where we've been through fourth turnings was really quite powerful. And Neil's just. He's just a wonderful human being, but he's just an incredible repository of information about those cycles of history. And I think it behooves everybody right now, particularly, to really be paying attention to that, because we live in very difficult times.
Yeah, I couldn't agree more. Now, since it is your first time on our podcast, and even though it might be redundant for many of the people listening to us because they will already know you, of course, but I think maybe just to set the stage for the conversation, maybe you could give us a few highlights from your background, at least, that will be relevant for what we're going to talk about today.
Yikes. Well, I mean, highlights for me include winning the under-19 basketball championship in the Bromley region. After that, things got a little bit less exciting for me. I started work in the City of London at a merchant bank called Robert Fleming in the mid-'80s. Spent some time with them in Japan, in Tokyo, at the height of the Japanese bull market, and then bounced around to the US, spent almost 10 years in the US, spent some time in Hong Kong, in Sydney, in Singapore, mostly working for bulge bracket banks, mostly UBS, Credit Suisse. Then I worked for a hedge fund in Singapore for a few years for a friend of mine, Steve Deagle, running one of his portfolios, which was an incredible experience for me. And then kind of accidentally co-founded Real Vision with Remy, Raoul, and Damien, and that kind of took me off on a very different journey that I don't think any of us planned for it to take us where it did, but it took us that way anyway, and it's been a hell of a ride these last sort of 7 or 8 years.
Well, I'm glad you took that turning because the stories you have told since are just amazing. I want to start out with, there's so many places we could start out because not only do you know a lot about a lot of things, but you also talk to a lot of the best people in so many other topics. But we both know Peter Zeihan, and we both are familiar with his framework. And actually, Peter's episode very much resonated with my audience. It's by far the most downloaded episode, even though it's only a couple of weeks old. So using that as a framework, I just wanted to ask you, when you look at the big picture, kind of a truly global macro view, what kind of roadmap do you see? And then maybe we can dive into some of the sort of specific topics later on.
Yeah, no, I think the fourth turning is a big part of that framework because we tend to think that that decisions are being made in and of the moment which change the course of history. But there are these big cycles that sit above that, and this idea of four turnings in a seculum is a really important one because you go back to the Bible. My friend Simon Mikhailovich always quotes Ecclesiastes: "There's nothing new under the sun," and he's absolutely right. Mankind is the history of mankind is a history of cycles. And so for the really big global macro picture, I think you have to look at the historical ones and not necessarily policy decisions or currency moves or any of the kind of things that we all get bogged down in the everyday lives that we lead. So for me, I look at that fourth turning, I realize that we're in a critical part of history as we see the end of an era. We see the boomers retiring and that power will be handed over. I'm Gen X. We're kind of the forgotten generation, and the reins of power will likely skip my generation and go to the millennials. And of course, when you have a change in power, when you have a change in the old guard who are dying off and they're being replaced by younger people, those younger people are going to be looking out for the interests of their generation and beyond. And the way the world has gone over these last 40 years and the way that wealth has been distributed, necessarily, there is going to be a sea change in how the world is governed, because if you are going to govern the world for the benefit and the future prosperity of the millennial generation, there necessarily has to be a significant transfer of wealth away from the boomer generation and to some extent the Gen X generation and into the hands of millennials and Gen Z. And that doesn't happen quietly, it doesn't happen peacefully. People don't hand over money, it tends to have to be taken from them. And so, when I look at these, where we are in the very big picture, with that, it's a generational moment where the people entrusted with running the world, if you like, are changing, and they're changing in age, but they're also, with the rise of China, changing in geographical location. And with that, it brings a whole different framework. The way that the West thinks about the old and the young is very different to how the East thinks about the old and the young. So we're in this enormous whirlpool of cross currents that are shaking the very foundations of our society today. And we like to put that at the feet of either central bank policymakers or governments being spendthrift. The reality of it is this is, again, a natural cycle. So I think once you look through that and you realize that what we're going through, there's a degree of inevitability to it, then, you get down to Peter Zeihan's framework and you look at the way Peter looks at the world right now, and particularly with, the Russia-Ukraine, and I totally understand why that episode was so popular. Peter's done some phenomenal work over the years writing books about this, and his last book, The Accidental Superpower, sorry.
Yes.
The Accidental Superpower was a great primer, but then I think Disunited Nations, where Peter went around the world and went through each country and outlined their strengths and weaknesses, was a real eye opener for anyone that's read it. You realize that the stories of China being super powerful and a massive threat, there's a lot more grey to it than that. You look at what Peter's written about Russia in the past, and you realize it gives you a whole new perspective on perhaps the reasoning behind Putin doing what he did. When looking at it through a traditional lens, it makes no sense whatsoever. So again, there are these generational ties, and I'll stop talking in a second, I promise you, that are much, much bigger than markets and current leaders that I think we all need to be aware of. And reading people like Neil and people like Peter Zeihan will give you, if you allow them to challenge your thinking, a much better, more robust, broader framework with which to view the sort of smaller decisions that we make on an everyday basis.
Yeah, I couldn't agree more. And I just have kind of one follow-up question before. I know Jim has lots of interesting questions lined up as well. But as a one follow-up question, which is one thing that I'm kind of struggling with myself, is that I tend to agree with a lot of what Peter has written. But I'm also very conscious that he's incredibly bullish on the US. And he's not very bullish looking out sort of 10, 15, 20 years on China and Russia. And I'm always a little bit, maybe it's kind of my trading experience is that when there's something that's a sure thing, it's not a sure thing. But the thing about the democracy and the resources in terms of the US, there's no point in debating that. I fully understand that. But I also see when I go to the US, I work for a firm based in the US, so I come on a regular basis. I know you spend a lot of time in the US. I also see a country that, at least compared to Swiss standards, looks like it has a pretty rundown infrastructure and it's pretty well divided internally. How do you see that from your perspective?
Yeah, it's such a great question. I'm so glad you brought that up, because the pushback I've always gotten whenever I've interviewed Peter in the past have been people that just write him off. Oh, he's just another one of these America rah, rah, rah guys, and America's better than everybody else, American exceptionism. And I totally understand why people say that. I think to think that and then write off whatever Peter has to say is incredibly foolish. But I understand, and I actually asked him the last time I had him on, I asked him that question. I said, people will say to me that you're just an American apologist and you think America's better than everybody else. And I think the nuance here is that what Peter describes is, in terms of what makes America strong, ex the military, is just its independence in energy, its independence in food, the incredible river system that it has. There are massive natural and geographical and geological advantages that America has that does make it, and I'm doing this in air quotes, the greatest country on earth. Now, that's nothing that politicians can't screw up. And I think to your point, America is in a mess in many, many ways. It's in a mess societally. It's in a mess politically. And all that really comes from, if you go back, my first trip to America, I would have been probably 8 or 9 years old. And, I went to America with my parents. My dad was going over there for business, and we kind of tacked a family holiday onto the end of it. And America was this land of dreams for me as a kid, from movies and stuff, and just, I don't know, America represented something to me. And my first trip there cemented my admiration for the country and my love for the country. But it's interesting to look now at what America has become, because back then in the UK, we had this thing, the tall poppy syndrome, where if you made it, if you became successful, people were jealous and would try and cut you down. And there was always this sense that in America, they applauded you if you made it. If you ended up being able to afford a Rolls Royce, this was always the benchmark when I was a kid in England. If you could afford a Rolls Royce in England, someone would scratch it with their keys because they were jealous. Whereas if you made it in America and you had a big Cadillac, people would ask you, what did you do to have to get this? What were your secrets of working hard and earning this? And that's changed. That's changed over time. It's changed over the last half a century, sorry. And the state has become more involved in people's lives and made more decisions and borrowed more money to provide things. And it's allowed the core of America to kind of rot on the vine in some ways. And your point about the infrastructure, Niels, is absolutely spot on. I lived in Asia for many years, and you'd go through airport after airport in China and Hong Kong and Singapore, which were just unbelievable facilities. Everything worked. The infrastructure was incredible. And then you'd get on a plane in Changi and then you'd land at JFK and you'd think, what the hell just happened? I've come out into what feels like a third world country. It's remarkable. And so America has definitely taken its eye off the ball and spent an awful lot of money they don't have on things they don't need, while neglecting the inner kind of turmoil amongst its people, both left and right, and wealthy and not wealthy. And that, I think, is the difficult part, is to hold those two ideas in your head at the same time. Is to be able to recognize the incredible advantages America has that make it this incredibly strong country, but also recognize the deficiency in the decision-making and the leadership that's accumulated over. This is not Joe Biden's fault, it's not Trump's fault, it's not Obama's fault, it's not Bush's fault, it's all of them. Going back to Clinton when he had, the first surplus in half a century. So it's just the greatness that America has is being eaten away by the mediocrity of its political class, unfortunately.
So our founding fathers here in the U.S., I'm very much an American, right? I was born in London, lived in Turkey, but I did grow up here. So I'm aware of my biases. But, our founding fathers in the U.S. knew this when they kind of broke away from England.
Yes, they did.
They very much created a system of checks and balances and realized the corrosive powers of absolute power, right? I think it's very interesting, and I think there's an interesting lead into talking about the Federal Reserve, but we very much didn't want any extra governmental power because we realized that eventually that would lead to greater inequality and the lack of movement between classes, and the very thing that you talk about kind of degrading here in the U.S., which I agree with. We created the Federal Reserve to respond to financial crises and to essentially smooth the business cycle, right? The problem is, founding fathers made it very difficult to pass laws here in the U.S. because they knew that, otherwise corruption would take hold. They needed crises. If you didn't have crises, you wouldn't solve problems, here. And so the Federal Reserve has smoothed the business cycle. The problem is we haven't had crises for, the crises are wider and longer. And that's allowed, the corrosion of, absolute power to kind of corrupt the system and inequality to grow. That's my opinion, at least. I'd love to hear your thoughts on kind of the Fed's role in kind of the decline of the U.S., the where we find ourselves now, right? And with populism and inequality, and maybe we'll pull on that thread a little bit and go from there.
Well, it's interesting. Keynes spoke about inflation being dangerous because not one man in a million could recognize it for what it is, and I think the Federal Reserve suffers from the same thing in that everybody's heard of the Federal Reserve, and everybody's familiar with the guys in the suits who stand up on the podium and tell them everything's under control. But most people don't really understand what the Federal Reserve is, what their role is, why they're there in the first place. They're the guy, right? They're the guy in the suit behind the dais, and people tend to defer to those people. And they've been given this twin mandate of stable prices and low unemployment. They were really brought in as the lender of last resort. That's what they were there to be, to backstop the system if people needed to borrow money. But the idea of borrowing money was at punitive rates of interest. The idea was if you needed to borrow money, it would be lent to you, but you would have to pay for it. Over time, the function of the Federal Reserve has become corrupted to just be a system that, to your words, Jim, about smoothing the business cycle. It's not even really been about smoothing it. It's been about making sure that the downward half of the business cycle doesn't happen. And to do that, the answer has been to throw money at it. And obviously, the fact that we live in a fiat system has allowed them enormous latitude to throw money at it. If we were on any kind of hard money standard, and I choose that rather than the words gold standard because that triggers so many people. But if there were any restraints on the ability to print money and prop up the system, we would have a wholly different outcome. Would there be fewer millionaires? Yeah, probably. Would there be less inequality? Absolutely. Would we have had more recessions? Yes. But they probably would have been shallow, and they would clean out the dead wood like these things are supposed to do. And we wouldn't have reached the point we're at now, which is in the event of a serious recession, everything goes down. The stock market has become dependent upon the Fed. The bond market has become dependent upon the Fed. And this idea, and this comes back to the point about few people really understanding what the Federal Reserve actually do, the idea that they've made capital essentially free for the last, pick your time frame, but close to 3 decades, really. When you corrupt the price of money, you corrupt every single transaction that takes place on a daily basis everywhere. And if you have no solid foundation, if there's no truth in the price of money, then you can't have truth in society, because everything in society in one way or another comes back to trust in money. And so, when you ask about the Federal Reserve's role in this, they play a much bigger role than the public believe. It's not all their fault, because politicians have made fiscal errors as well, but they've been encouraged by this idea that it is possible to print money with abandon and there'd be no ill consequences. We've had 20 years of, we need to print more money because inflation's not quite where we want it to be. We all knew that this would ultimately happen. We all knew that ultimately you would not get a smooth 2% inflation and everything would be fine. We all knew that. And no one will ever convince me that the people at the Federal Reserve didn't know that. They knew it. They just figured they'd be able to control it. And that's just hubris. So the Federal Reserve, a lot of the blame can be laid at their door. And, the interesting thing, I saw a tweet about this the other day. There seems to have overnight been a wall with barbed wire at the top of it erected around the Federal Reserve building in Washington, D.C. in the last month or so. I don't know when it happened. I don't know why it happened, but it's a very interesting sign to me that they are putting barbed wire around the Federal Reserve, because, frankly, if people woke up and understood the Fed's role in this, that barbed wire would be a very, very smart thing to put up around the building.
Back to the fourth turning.
Yeah, I couldn't agree more. I think there's the lack of education about what the Federal Reserve does, the difference between fiscal and monetary policy. This idea that stimulus is stimulus. People don't understand the difference. And I think that understanding is so critical to understanding where we've been the last 40 years, since we really, as you mentioned, moved to a fiat system. The Federal Reserve is the only game in town, because especially with the exorbitant privilege of the dollar, we've been able to put money into the system to do supply side economics, to lower interest rates for capital. And we've created a technological revolution, right? Which is incredibly deflationary. We've spurred globalization as a result, which has all kicked off this major inequality. And it's funny that, as you mentioned, these cycles happen regardless. It's really a tension behind it all of growth on one end, the natural state of competition, right? Survival of the fittest, if you will. And then this idea of fairness on the other side, right? Which is, your mother always told you life isn't fair, but we are a community where human beings were social creatures. And that left versus right, that populism versus capitalism, however you want to kind of paint it, is really I think what drives those cycles. But the monetary policy piece is really what allowed that cycle to expand in the way it did this 40-year cycle. I find it very, very, very interesting that regardless of, as you mentioned, of whether or not it's this system or another, that cycle plays out, and eventually it becomes let them eat cake, right?
Yeah, it does. But the sad part of this is, on the other side of that event are wholly good things, right? This is the big problem with this. The cycle turns, and once you have this clean out in the fourth turning, you've got 40 years of prosperity ahead of you, both on a societal basis and in terms of the wealth of nations. And so, obviously, we come back to that. The boomer generation don't want to give up the reins of power, because it means giving up a lot of the assets they've accumulated during that period. That's where the turmoil comes from. But it's like any tough decision. The sooner you make it, the sooner you can get to the clarity on the other side and the ability to clean out the cobwebs and grow. But we never learn. We don't make those decisions. No one is going to step up in front of a microphone and say, you know what? We think what we should do is we should take the housing market down 50% so that younger people can afford. We are going to, start taxing assets. We're going to start transferring the wealth from our generation to yours. It's just not going to happen, unfortunately. It tends to be the young generation saying, right, well, if you're not going to give it to us, we're going to take it, because that's the only way the cycle can cleanse and begin again, is to get some of the assets, get some of the wealth in the hands of the people who have their lives ahead of them and are going to do something with it. So it's coming, whether we like it or not. The question really at this point is how dramatic and how painful is it going to be? And I would suggest that the decisions being made this time around in terms of prolonging this cycle and delaying that change of ownership just makes it that much more painful when it occurs, unfortunately.
Could there be another way, though? I've heard people talk about that they believe that inflation will help reduce the inequality. I mean, we rarely lift up the lower income groups, but during inflationary times, we kind of bring down maybe the higher income groups a little bit closer to the low income groups. Does that have any resonance with any of you?
I think it's the opposite. I just don't think that's the case. You know, what we've seen for the last 20 years is a very different kind of inflation. You know, when the average man in the street thinks about inflation, right, he's thinking about the cost of filling up his gas tank and the cost of feeding his family. What we've seen throughout this period of QE is massive asset price inflation. We've seen it in equity markets, we've seen it in bond markets, we've seen it in real estate all over the world. That's the inflation. But while the CPI print has been kind of moribund, people have been able to say, well, there is no inflation. But of course, the average man in the street doesn't own a huge stock portfolio. They don't own a couple of investment properties. They don't own, a big 401k. And so what we've seen is a certain class of people getting much, much wealthier. Now we're seeing good old-fashioned inflation. And I've spoken about this before, but this idea of gas prices going up to unaffordable levels is such a problem for policymakers, because everybody who has a car, and that's an awful lot of people, has to fill it up with gas. And so you fill it up with gas, you really notice what it costs, because there's no apples to oranges comparison here. You fill the same car up with the same gas, most people at the same gas station every week. And one week it's $70, the next week it's $100. And that's very, very real. And so not only do you feel that when you put your credit card in the pump, you get in your car with that in your head thinking, wow, it's got so expensive to fill my car up. And suddenly you notice the price at every gas station you drive by every half a mile. Wow, it's 20 cents cheaper there. I must remember to go and fill up there next time. And so we've got that kind of inflation now where people are looking at their grocery baskets and thinking, I can't afford to buy a steak this week. I'm going to have to buy a chicken for the family. And that is, anything but leveling the playing field. That is making the price of things that people need to be able to live unaffordable. And that doesn't hurt the people who have an awful lot of discretionary wealth at their hands, who can go to the grocery store and go, wow, my grocery bill was more expensive this week. They don't have to make any substitutions. They just make a note of it. But it's not affecting them, making them change their decision-making process. And that's where we are. And so I think the inflation we have now is going to hit the poorer sections of society much, much harder than the wealthy.
I mean, it's a flat tax at the end of the day, right? Which affects the bottom more. But to your other point, I think we are going to see multiple contraction. I mean, if you look at 1968 to 82, the time period right before this 40-year kind of boom cycle, equity markets went nowhere in nominal terms, and they lost almost 70% of their value in real inflation adjusted terms. So, the boom that's happened for the rich and the kind of the compounding power of investment will, in my opinion, and I think most people would agree, decline. And I think that force is actually much stronger than the inflationary push. And I think if anything, politicians will have to respond to the populist push that will increase even in a time of inflation. We're already seeing it, price controls, all kinds of other fiscal measures. So it's definitely debatable. I think, just to be polemical a little bit, I do think that during these periods, we do see a normalization. I do think, 68 to 82, we rebuilt the middle class or continued to grow the middle class, here in the U.S. And economic growth was actually quite strong in real terms, despite, the inflationary push and how bad markets did. So,
it's a great point, but it's interesting to know. We go back to this idea of turnings. That was an awakening, right? That was post World War II, post the fourth turning, and yes, we had Kennedy in the White House. We had this rebirth of America in the early '60s. This great idea of hope, the young generation taking over, and that did change things. It did shift the dynamics. And so your point is extremely important for people to understand, I think, particularly given your focus on the stock market. After 1929, it took until the early 50s for the Dow to regain its previous high. And yet we've become accustomed that stock markets don't go nowhere for 10, 20 years. It happens regularly. It's happened throughout history. But we've just spent 20 years with it just going in one direction, apart from '08, which now just looks like a blip on the chart. And so for people to get comfortable with the idea that, hey, your stock prices may go nowhere for a decade, it's a very difficult mindset for people to kind of get into, because they just have no experience of it. Like they have no experience of double-digit inflation.
One of the things that I've been thinking of, one of the things that I think also have happened during the fourth turning, correct me if I'm wrong here, is and I think this is the one thing that could really change things. And I do believe that even according to Neil's calculations, we still have quite a few years to go before the fourth turning is over. But it's this kind of loss of confidence in, say, the Federal Reserve and other institutions. And if we just take a sort of a simple way of looking at that, when has the Federal Reserve usually had, when have people have little confidence in the Federal Reserve? Could be when interest rates were really high, like in the late sort of 70s, early 80s, before Volcker came in, confidence was low. But at the same time, when we have very low interest rates like we've had for the past decade or so, generally speaking, I think the market has had quite a lot of confidence in the Fed's ability to manage this. So it kind of, for me, ties in with this period of time ahead of us where interest rates could go a lot higher than anyone can think right now, and that we lose this confidence in these institutions at the same time as we go through this fourth turning. That's kind of how I see it.
Yeah, you're absolutely right. And if you think about it, it's ironic that confidence in central banks, in the Federal Reserve, should be at its highest when interest rates are at their highest, because that means they're doing something proactive to choke off a problem for society. When confidence in the Federal Reserve has been at its highest, it's when interest rates have been at their lowest, which is really the part of the policy cycle where they've been abject in the way they've handled these crises by simply continuing to lower rates. And that idea of the loss of faith in institutions is absolutely a key feature of the fourth turning. I mean, just look at what happened. I mean, Neil and Bill wrote this book in the late 90s, and they pegged 2008 as the beginning of the next fourth turning. Obviously, these dates are imprecise, but it's interesting that started with, obviously, the global financial crisis, the same way a previous fourth turning started with the Wall Street crash in 1929. And this erosion of trust in institutions since then has been amazing to watch. In financial circles, the lack of confidence in the Federal Reserve has grown, and it started to include an awful lot more people. There were people calling the Fed out long before it became fashionable to do so. But look at the last year. The pandemic comes. Look at the levels of trust in government. Look at the levels of trust in the CDC, in the WHO. All these institutions which prior to the last 2 years were not really thought about so much. It was assumed that the CDC were there doing their job and keeping us all safe, and the WHO doing the same. But now that trust has been shattered by the last couple of years. And it's not been shattered for everybody, but it's caused division. And there are now people who, if you bring up the CDC, will get really animated about the quote-unquote crimes they've committed against the American public and stuff. So we're seeing all this stuff play out. We're seeing this loss of faith in institutions. And Niels, it's a key pillar of how a fourth turning unfolds, because for institutions to be brought down and rebuilt in the image of a younger generation, how they feel that these institutions should be created, it requires this to happen. It requires the faith to go. It requires the tearing down of old institutions and the rebuilding in the light of a new generation. And look, it's happening. It's happening right in front of our eyes.
Clearly, the man who put up the barbed wire in front of the Fed has read the fourth turning.
Yeah, absolutely. Right. Or his brother's got a barbed wire factory. I don't know.
I think it's very important. You alluded to a couple times, but to understand the generational divide that exists. And in my view, again, this really ties back to monetary policy, right? This inequality has been driven by, capital appreciating, right? Inflation of investments, which were held primarily by the boomer kind of generation. And the younger generation, millennials on down, have the smallest kind of down payments, the smallest nest egg of all time, in American history here. Well, not all times, but back to, the early 1900s. And so it's important to understand the distrust of government is greatest in that group. And that explains a lot, right? It explains crypto. They've also grown up in a time of technological revolution driven by monetary policy, right? Because capital was free, and 40-year outcomes is what was, rewarded. So, this idea that, technology can solve all our problems, yet the system is broken. It's essentially what crypto is. It's a kind of a religious expression of that, not to mention a desire to catch up because they're so far behind. So I'm curious to hear your thoughts on, I feel like a podcast these days without talking about a little bit just of your thoughts on crypto and how that might play out in the fourth turning or whatever we're in. I'd love to hear your thoughts.
Well, it's a subject I don't spend an awful lot of time on, to be honest, simply because for me, I have enough skepticism to not drink the Kool-Aid and believe that Bitcoin will be the savior of the world and solve every problem that is put in front of us. I understand the kind of bones of it. I understand the ideal of it. I think it's great. I think what it set out to try and do and the problems it set out to try and mitigate are commendable. But it's been hijacked. It's been hijacked into, as you say, a religion. And I have tremendous problems with anything that's religion-based, particularly in investing. And so, I look at what's gone on in the world of crypto. I've watched with I have to say, tremendous angst what's happened these last couple of weeks with the Terra Luna meltdown and seeing all these stories of people losing everything on these stable coins, including personal friends of mine who have suffered greatly and lost money that it will take them decades to make back, hopefully. So, I look at that and I look at how that happened and the speed with which that happened. And it just tells me that the regulators surely have to step in at some point and stop that happening. It's one thing to be able to invest in something and for it to go to zero, but for it to go to zero overnight with no chance to risk manage, with no chance to take your position down, with no chance to say, look, I'm too big here, I want to cut my losses and get out. To the tune of tens of billions of dollars, it seems derelict for regulators not to step in and do something material about this. So, I try and steer away from the crypto conversation, partly because I fully admit that my knowledge is nowhere near where it needs to be to have any kind of voice on the subject that people should listen to. And that stems from the fact that, again, at the very early days of it, I realized that if I wanted to really understand crypto in a way that would make me a credible person to talk about it, I would have to devote an awful lot of time, not only to understanding it, but to stay current with it. And I just don't, A, have enough time to do that properly, and B, have enough desire to. I'm of the generation that thinks about getting rich slow, not getting rich quick. I'd rather get rich slow and stay rich than try to get rich quick. And I think one of the things that crypto is, to your point, Jem, is it's a way for people to, in their eyes, even the scales out and make the kind of money they need, not want. They need to be able to get on the housing ladder or to buy that car or to get married or whatever it may be. And you come back to the institutions and this idea that is being floated around everywhere you look about, in the future you'll own nothing and you'll be happy, right? This has been a war cry of, I don't know if I think it's maybe the WEF, the World Economic Forum, the Davos crowd. This idea, and you see this headline, you see these articles planted about the future. You'll be eating bugs, and they're going to be good for you, and you're going to own nothing and be happy. And that to me is the last roll of the dice. Is that if we can convince you that you don't need to own anything and you'll be happier than you were, then we can win. We can keep all the wealth that we've accumulated. You won't need it because you will think you'll be happier. I just don't think that's going to work. And while crypto began as an expression of that frustration, I think it's been co-opted. And my friend Ben Hunt writes brilliantly about this, how Bitcoin has been co-opted into a Wall Street product. And, he talks about Bitcoin becoming Bitcoin TM, this kind of show tune version of Bitcoin that is being co-opted to make Wall Street richer. And sadly, I think he's right to a great extent. So, crypto has still got a long way to go, but I suspect that the amount of pain that's going to come in crypto will lead to some crazy regulation, some crazy overreach by authorities, people writing to their congressman about how much money they've lost in a stable coin and do something about it. And so I think there's a lot of hard yards ahead for crypto, and that something will come out the other side of it. I just don't know that it's Bitcoin. And one of the most simplistic ways of looking at it that I've heard is from a guy who called David Dorr, who I had on my podcast, and David is very pro blockchain, and he asked me the simple question. He said, when you think about crypto as a technology, and it's championed by a lot of people that have rich technology backgrounds, this seems to be the first technological advancement in history where everybody's convinced that version 1.0 is it. What's Bitcoin 2.0 going to look like, 3.0, 4.0? And that to me is kind of one of the foundations, misguided or otherwise, of my own thinking around it. It's like, I just don't believe that technology version 1.0 is the be all end all. I think something else will emerge.
I couldn't agree more. I mean, it's, clearly it's speculative. Clearly, it's been co-opted as any other currency pretty much in history has been by the sponsors or the sources of power, right? That said, I think I'm open, and I've been thinking a lot more about crypto's role as this fairness kind of tool. It is, in a way, the new America for this generation, right? It is this wresting of power from the top, and what that means is all it's. I'm sure the British were very skeptical of America, right? It's naturally, cynical. We're naturally cynical and skeptics. But if this is bad enough, right? Maybe, maybe that source of freedom in some way ends up being more important, especially for this generation. Again, I'm a bit of a cynic like yourself, but I do like talking about it because I think it is an important topic because it's kind of owned by the generation that's coming to power, essentially.
I want to try and shift gear to maybe something about central banking 2.0. But before I do that, I just want to pick up on one thing you said, Grant, and that's that we see some players in the crypto space. People, I don't mind naming them, people like Michael Saylor, for example, where I think that the way he might have a good cause in terms of new technology and all of that stuff. But I just think the way it comes out, where it just seems like reckless risk taking with no risk management whatsoever. But what I see that a lot in that space. But what I'm also seeing is it's starting to spill over to our world when I look at someone like Cathie Wood. I mean, what on earth are you doing in terms of looking after your clients' money? The way the things that are being bought, the things that are being sold, and the level of volatility in the products. So I don't know if it's a sign of the times or if it's just people getting inspired of what's going on in the crypto space and then they're implementing something on that side. It wasn't really a question, but I do see some of these tendencies spilling over a little bit. But I do want to try and shift gear to kind of central banking 2.0. And I want to talk about the role of the yen, because one of my previous guests, I'm sure he's also been on your podcast, David Dredge, he put out a piece this morning, I think I received it, where he talked about what's going on at the BOJ and the rate they're buying JGBs on at the moment. I think they already own 67% of all JGBs. And at the speed they're buying them right now, because they're doing this yield curve control, they could essentially buy the rest in 50 days or something like that. It's a relatively short period of time. And I was just wondering if any of you have an idea of what happens if a central bank ends up buying all the bonds.
It's such a fascinating question, and Bill Fleckenstein and I have done. We're still doing an entire series called The Endgame on this because we're trying to figure out exactly the answer to that question. Look, so far, just I believe they call it the TLDR these days. We haven't figured it out yet. But the BOJ is fascinating, right? Because they've been doing this for some time. They've been instituting yield curve control for some time at the BOJ, and pegging that 10-year effectively at zero, and they've gotten away with it for quite some considerable amount of time. Right? They've been able to buy JGBs and stand there, bid for an unlimited amount. And what happened? The market backed off. And there were days when the 10-year JGB didn't trade. Zero volume going through in the 10-year bond of a G7 nation. It's unfathomable for any of us who have spent any time in markets. And at my very first job on the trading desk was in the JGB desk back in 1986 when they had yield. But it's been fascinating to watch them be able to do this and the yen be rock solid, right? Because all the time those of us looking at it thinking, well, something's got to give here, right? Something's got to give. The Aussie central bank, the RBA, they went out and pegged the 2 or 3 year part of the curve.
It's the 10-year, but to 2024 or something like that.
Right. But what was interesting with the RBA is they capitulated. The RBA tried this experiment, they capitulated. And if anyone looks at the chart of the 2-year yield of the Australian government bond, you'll see what happens when yield curve control fails. I mean, it's an unbelievable chart for a 2-year government security. Now Japan comes along, they've been quietly doing this, and everyone said, well, it doesn't matter with Japan because the JGB market is all owned domestically and there's no foreign creditors, it's not a problem, and blah, blah, they'll be able to do this. Well, hey presto, now we're looking at this, they're still doing that, and suddenly the market's not backing off. And suddenly this is being seen in the yen. We've seen the yen weaken dramatically. Again, a 20% move in a G7 currency in a year is almost unfathomable. I mean, it happens, but it generally happens for very, very bad reasons. And so we're going to find out, I think, now with Kuroda-san and the BOJ, what do? Do they continue to stand bid for an unlimited size of JGB and end up owning the entire market? And if they do, what happens to the yen? But then we get to this $64,000 question: is what happens if they do own all the JGBs? And Bill and I have talked about this at length. And do they just do a swap between the Bank of Japan and the MOF? Is there a perpetual zero coupon bond written between the two, and the whole thing gets written off? And if that happens, it's like, if the tree fell in the forest and no one heard it, did it really make a sound? We don't know. I mean, none of us know because we've never crossed this Rubicon before. If they do that, technically speaking, the Bank of Japan's balance sheet is pristine. But what does that actually mean? Because we all kind of know what's really happened here. But if you think about what's been going on for the last 20 years, we've all kind of known what's happening here. And it's like, well, if you don't tell us, we'll pretend we don't know, and we'll all carry on the same way. And people tend to not want to confront these things until they have to. So maybe they could pull off this magic trick and do the swap, and everyone kind of goes, okay, and maybe the yen gets stronger. You can make a case for both. One thing that we know is if that happens, we'll find out. And Japan is ahead of the curve. They're ahead of the ECB. They're ahead of the Fed in terms of where this is going. The dynamics of the the government bond markets in each place are vastly different to the yen. So it's, again, not apples to apples. But I suspect the Japanese are going to be forced to try something like this. And it's going to be an experiment for everybody, including us. And I dare say when it happens, the market will probably blink for a moment and not have the first idea about what to do about it. But just like we've seen with the yen here, which has been stable for a long, long time, suddenly people are thinking, there's a chance here. There's a chance that they're weakened. There's a chance that there's a trade to be had. There's some money to be made here. And we're going to go. I just spoke to Tian Yang of Variant Perception in London. And for the first time, those guys are talking about, maybe this Widowmaker trade being short JGBs, right, yeah. It might actually be the time. And that has been the Widowmaker trade for 2 decades. Everybody's gone broke shorting the JGBs. But when you look at what's happening with the yen, something shifted in the last 6 months. Something shifted in the last 2 or 3 months with the yen. And so you can see the market sniffing around thinking, okay, this is different now, so maybe we'll start pushing the boundary. And that, coming back to where we started with central banks, that's the one thing they've had in their favor that's kept them in business longer perhaps they should have been, is that the market hasn't had the courage to test them. And I get the sense that's going to change. Look, we've seen Philip Lowe, the governor of the RBA, apologize for the hapless performance of the RBA over this yield curve fiasco and the resultant inflation that's caught them by surprise. Last week, we saw Andrew Bailey, the governor of the Bank of England, testifying in London, saying that he was shocked at the surging food prices and helpless in the face of surging inflation. The next day, we saw one of the ministers saying that he was shocked, that the Bank of England was shocked at all this sort of stuff. So the vulnerability is starting to show. We've had Jay Powell say, well, with the benefit of hindsight, we maybe should have acted sooner. So this is like I always go back to this idea of how a Komodo dragon kills its prey. It bites the prey once, and then it knows that the venom in its saliva is going to kill it. So it just follows it. It just follows the prey until the prey falls down and dies and eats it. And it feels like we're at one of those points in markets where the Federal Reserve chairman and other central bankers around the world are finally showing signs of vulnerability. The yen is telling us something is changed, and there's a vulnerability there. And so I get the sense that amidst everything else that's going to be a test, I think central banks are about to be tested gently at first, but if they continue to show weakness, then I suspect those tests will get bigger and stronger for them. And I just don't know that they have the ability to deal with that.
Well, as you know, Grant, I mean, we've had all these stress tests of banks and financial institutions for the past 15 years. The only ones who have not been stress tested is, in fact, the central banks.
Great point.
That's one thing. The other thing that reminds me about the dollar yen, I seem to recall a conversation you had with your good friend Felix, who lives in Zug, where I live. And I think he said in the conversation to you, when you asked him, so what are you looking for as a sign? He said, I just watched the dollar yen. And I know, of course, so that's one thing. And I don't know whether you caught up with him. I know he was expecting quite a lot of equity downside this first half of 2022, about 30%. That's certainly playing out well. I don't know if you caught up with him recently, but everything he said,
No, okay. I spoke to Felix a couple of weeks ago, and his framework is fantastic. Felix is one of these guys that is a huge proponent of cycle work, and he has all these overlapping cycle frameworks that help him kind of come up with the whole of the framework. Felix expects markets, the S&P, to decline to around the 3,000 level, but then he thinks we could see a face-ripping rally. He thinks the S&P could double into 2024, and then he thinks that in 2025, that's when we get the big 1929 style meltdown where markets go down. I don't want to put numbers in his head, but the way I took it from what he said, 85, 90%. So he definitely has that framework, and I know he watches the dollar yen very, very closely. And I think when you have something like the dollar yen that so many people watch closely and it's done nothing for such a long time, that's why I think when you see it make a move like it's made in the last couple of months, a lot of people wake up and go, okay, something's happening here. I'm not quite sure what it means. Maybe it's Japan specific, but it's unlikely to be Japan specific. What does it mean? I don't know, but something has changed. This steady currency has now moved 20%, and that tells me we're in a new macro environment. And every macro trader I've spoken to in the last couple of months is just salivating at the potential opportunities that the loss of these steady markets might bring to them. Now, it's going to be a terrible, terrible time for retail investors who are used to passive and are buying the Cathie Wood stories and are buying all these wonderful stories about progress and technology and 50% returns. What the environment we're likely to go into, if past fourth turnings are anything to go by, is one where you want to have professionals managing your money. You want to have guys who know what they're doing and know how markets can swing both directions, rather than a generally trending upward market with the occasional kind of blip. You're going to see things happen, I suspect, in the next 5 to 10 years that most people who've come late to markets over this last couple of years of kind of frenzied speculation think are either impossible or, when they happen, completely unfair. and they'll want someone to step in and fix it for them and recover their losses. And I think we're into a very, very different environment, and the dollar yen rate is just a very tiny canary in an enormous coal mine.
Yeah, and I should for good order say that it's Felix Zulauf that we were talking about, referencing in that sense. Jim, where do you want to go? Because I have got a completely different asset class I want to ask Grant about later, but where do you want to go, Jim?
I mean, I could keep pulling on the finance thread. I'll say one last thing about that, and then we can kind of move on. But I do think it's important that so few people truly understand monetary policy and the creation of dollars. People think that creating dollars on the monetary side is inflationary. And I think it's been well documented by this point. We understand that it hasn't been inflationary because that money never really enters the economy. The velocity of that money has been zero, actually somewhat negative, because I use the analogy, money has been going to planet Palo Alto for 20 years. Actually almost 40 years. And that money doesn't enter our planet. Instead, they send us technological, advancements, they send us Ubers and Amazons and Teslas, right? And those things are actually deflationary. And the money never hits our shores. So the difference, what's changed is that helicopter money has now started. Fiscal policy has started. Real dollars with velocity of one have been entering the economy. And we had an order of magnitude greater fiscal stimulus in the last 2 years than we've had ever in the United States in real inflation-adjusted terms. I mean, adjusted for the size of the economy, the $12 trillion that we've passed here in the U.S. is about the size of the New Deal. The New Deal, filled a decade-long hole called the Great Depression. Look around you. This is not the Great Depression. So I do think, in reference to the JGB, the yen and what they're going to do, I think there's a broad misconception of if they just make that money go away, that's somehow inflationary. The reality is that money never entered the economy. That money never was here. Instead, it stimulated investment, and that investment, fiscal stimulus, the price of money going up will be the ultimate problem, in my opinion. Anyway, my 2 cents there, just to kind of add a different perspective.
Well, but Chairman, it's worth, but it is worth just making one more point on that, because I think you're absolutely right. But it's amazing how we had that, 1 or 2 rounds of stimulus checks going straight to the public in the middle of the pandemic, and within 18 months we've got 8% inflation. So it just shows you how dangerous that can be if it's injected straight into the veins of the economy. And of course, now you've done that, people are going to want more. The next time there's a problem, they're going to want the stimulus check. They're not going to want this stuff going to banks again.
Yeah, and this is how it ties into that kind of fourth turning, and it's populism that's really the issue here, right? Underneath this all, this monetary fiscal, we can talk about this, but monetary is the lever of the wealthy and the powerful and the strong, in a sense, and that's gone too far. And now populism is, whether you're in the U.S., Donald Trump or Bernie Sanders, you've gone left, right? And you've gone left, far, far left. And that populism is really the issue at hand here. And that is how these cycles play out. And ultimately, anyway, that's kind of to connect all those threads we've been pulling on.
Yeah, I mean, I wonder if the MMT crowd still don't think that there is a limit to how much money you can put out in the system. But who knows? We'll find out. I want to shift gear a little bit because, as I mentioned, I am a very happy subscriber to your work, Grant. And in your recent newsletter, you took a stab at a asset class that actually is probably bigger than any of the ones we normally talk about. Many people will have exposure to it one way or the other, but we don't talk about it so much. And by the way, thanks for the shout out in your newsletter for our conversation with Adam Rosenzweig, by the way. But it is real estate that I'm talking about. And I would love to hear kind of your thoughts as to what you see happening. I noticed, for example, that we have sales of existing homes in the US that fell in April, 2.4%, the lowest, or it's down to the lowest level now in 2 years. But you looked at it more broadly, but I'm also obviously interested in sort of your just general thoughts about where that can fit in the puzzle of what we've been talking about today.
Yeah, I mean, look, real estate, and I'm using Felix Zulauf's calculations here, is almost a $400 trillion asset class. which is remarkable. And it's also 1 million local markets.
Wow.
You know, it's very tough to have there is no global real estate market. There aren't even really national real estate markets. You know, I mean, here in the United States, there are some pockets of incredibly strong local real estate markets, at the same time, some really terrible ones. So it's a really interesting asset class, and one that people hold two views. They hold a very local view, and they hold a very broad view. And I remember my friend Steve Diggle showing me a survey that was taken shortly before the kind of housing bubble burst in the US back in 2007. And they surveyed a whole bunch of people, and I forget the exact numbers, but I'll be in the ballpark. But it was, like 75% of people thought housing prices were going to fall in the coming year, and 95% of people felt their house wasn't. And so that's kind of real estate in a nutshell. I think people have opinions about the real estate market. In their local market, everything's fine because they understand the neighborhood. They understand, oh, yeah, I know this place. This place is fine. I mean, I feel bad for those people down the road in Shelbyville, but here in Springfield, everything's going to be fine. And so, when I was writing that piece, I was looking initially at Australia, New Zealand, and Canada, 3 property markets which, for anyone not familiar with them, if you're familiar with the kind of levels of affordability that the US got to in 2008, these 3 countries are on a whole different plane. The unaffordability of housing in Australia, Canada, and New Zealand is quite shocking when you look into it in terms of the ratio of house price to median income and household debt to net disposable income. It's extraordinary. The charts just will make your teeth itch. And finally, we're starting to see signs that those property markets are beginning to crack. And this was before the recent edict coming out of China, which we'll talk about in a second. That came after I published that piece. But because of inflation and this idea of inflation returning, I think is so important for people to understand, because it's the one thing, and it always was, to your point, Jim, about the fact that we didn't have it. That was the only saving thing for the central banks. They didn't have inflation, because once you have inflation, you have to deal with it because it's a political problem. This populism doesn't come out of nowhere. Populism begins because people feel disenfranchised and because they feel like they can't feed their families. And so the return of inflation really means that if you decide to continue with low rate policies, inflation is going to get worse. If inflation gets worse, people are going to get angry, and politicians are going to get voted out of office at the very best, if not chased through the streets with burning pitchforks. And so this is a problem that has to be dealt with. And the only way to choke off inflation is to raise the cost of money. That's just how it works. And so Australia, New Zealand, Canada are finding themselves with central banks that are desperately trying to raise interest rates to choke off inflation. And they're doing that in countries where there is so much leverage in the property sector that the two of them cannot possibly coexist. We're seeing this in Australia. We're seeing it in New Zealand. We haven't quite seen it in Canada yet, even though Canada may be the most egregious of the 3. And then we saw this past week China come out and say that no CCP officials will be allowed to hold assets overseas, either in their own names or in family names. And an extraordinary amount of that capital sits in real estate in places like Canada, Vancouver particularly, in Sydney, in Melbourne, in Auckland. So there's another massive headwind for those property markets. If you look at the US, and this was kind of the conclusion of that piece, if you look at the US housing markets, it's nowhere near as bad, given the fact that they did delever in 2008. There is a structural shortage of housing in the United States. There's no two ways about that. And also, people can fix their mortgage rates for 30 years in the US. You can't do that in Australia. You can't do that in New Zealand. And as far as I understand, you can't do it in Canada. So you have a stability to the US housing market that you just don't have elsewhere. And, Ben Bernanke famously talked about how we've never had a nationwide fall in house prices just before 2008. This is a mindset that's very prevalent in Australia, very prevalent in New Zealand and Canada, that house prices only go one way. But of course, that idea has been fostered and inculcated in a time where interest rates only went one way, and that was down. So guess what? If inflation comes back, it changes the direction of interest rates, and that will change the direction of housing. So I suspect that in some of these wildly overpriced markets, you are going to see some dramatic falls in pricing. But it happens in a very specific way. You know, the first thing that happens is the bids kind of dry up because people can't get financing. Then the bids, instead of people saying, oh, I want to buy that house, I'm just going to borrow an extra 50 grand because it doesn't cost me anything to borrow an extra 50 grand, it's an extra $25 a month, that's fine, I can afford that. The price goes up, so the bids start to get more realistic. So first the bids go away, then the bids get more realistic, and there's a big air pocket between the offer, who are still pricing it off where they thought the housing market was, and the bid, who are now having an affordability problem, so they bid what they can, not what they want to. And then you have this stalemate, so you get nothing for a while until the price of the increased mortgage starts feeding through to the sellers, and they realize, well, actually, I now need to sell this house. So they go back to the buyers and say, hey, you know, that bid 20% below, is that still there? And then the buyers smell blood in the water. And so you see how this thing unfolds. And it's the same everywhere. And it's starting to happen in local communities, in local markets that have been hot and have seen interest cool off, and have seen, particularly in Australia, if you look in Twitter, you'll see plenty of houses being shown that, you know, were 1.4 million 6 months ago, and they're now asking for offers of over $1 million. And those are the kind of moves that you can expect to see in real estate. And I think that particular cycle is just beginning, but it's going to be playing out in places that aren't the front page. It's not going to be playing out necessarily in the United States, apart from pockets, but it will be playing out in the UK, and Australia, Canada, New Zealand, and some other really hot property markets that have no right being as expensive as they are.
It's very interesting, and it's not just, I think, the Communist Party that where you can't own a property abroad now. It seems if you're an oligarch, you shouldn't own a property abroad either. But for other reasons, yeah, absolutely. Now, we need to wind down. We know you have a busy time ahead of you, but I would like to just touch on one other asset class, if I may, because you can speak to all of them, and that is a little bit about the commodity super cycle. And you can kind of pick your part of the commodity spectrum that you want to highlight, perhaps. But again, speaking of our conversation with Adam last week, I saw in the Q1 report that came out, I think also maybe yesterday, they were looking at this. They had created this chart. They've gone back 100 years plus and created this chart where you look at the Goldman Sachs Commodity Index versus the Dow Jones. And even when we think about commodities right now, we think about how much they've gone up in price in the last 18 months. But when you look at this chart, it's still so undervalued. I mean, it's literally among the lowest levels in more than 100 years. On top of that, they talk about this is maybe the first time in the second half of 2022, it might be the first time where OPEC have no more spare capacity. They cannot change their output even if they want it. And of course, then we have the whole food crisis where we know crops are being put in place right now, but where there are severe droughts in many places like China, Brazil, the US, and we've had some other problems in Canada, et cetera, et cetera. So when you look at the whole commodity space, when you look at the potential dangers, whether it be energy crisis, food crisis, how do you think about all of that, you know, on top of everything else we've talked about?
It's funny, I haven't seen that chart, but I reckon I could paint a pretty accurate picture of it in my mind's eye, knowing what I know. You know, my friend Tony Deedon talks about the fact that we've been living through an age of virtual. And as we've moved more towards virtual, we've kind of lost sight of virtue. And by virtue, he means real things. And like every cycle, like the turnings we talked about at the beginning of the show, that's changing. And this idea that we've all become enamored with, that we can embrace virtual, we can embrace free money that's just printed out of thin air and there's no substance behind it, that changes too. You know, and people do start going back to the fact that, well, I now realize that I can't actually feed myself with printed money. I need to exchange it for food. And that's not so easy to print, as it turns out, despite what Beyond Meat and the others will perhaps tell you. So I think that's exactly right. This is another cyclical change. We are moving into a period where people will start to value the real over the virtual. People will want food, they'll want raw materials, and they won't want NFTs, and they won't want, whatever, bonds from companies that have no right being in business and paying them a 2% yield just because the price is going to go up. And that's a huge problem, because if we do have a massive swing back on a societal level to understanding what's real and what's important, we're not equipped to satisfy that demand. There's no way on earth we can satisfy that demand. And that's what we're starting to see. And we're starting to see it play out in places like Sri Lanka, where we're seeing riots, and we're seeing government building being raided, and we're seeing politicians' cars being thrown in rivers and politicians being beaten in the streets. Why? Because the people are hungry. And this is China's Achilles heel. If they can't feed the population, they've got a real problem on their hands. And I think Adam and the guys are absolutely right. This is a super cycle. Jeff Curry talked about this on my friend Dimitri Kofinis' Hidden Forces podcast recently. And Jeff's just such a great guy to listen to about this stuff. I mean, he's such an authority on it. I had the pleasure of talking to him a few months ago. This is a super cycle. And in super cycles, people have to get the idea that they can run for decades. And people tend not to think about interest rates as a super cycle, but that's what they've been. Interest rates have been trending lower. Bond yields have been trending lower for 40 years. That was a super cycle, and it's turned. And rates now, the pressure on them is to go higher. The need for them is to go higher, whether it's to compensate savers, whether it's to choke off inflation, whether it's to bring down excesses. Rates need to go higher. And whilst that's unlikely to be a multi-decade thing, time gets compressed when interest rates are rising. You saw a decade in the 70s where interest rates went higher, but really it was just the end of that decade. It wasn't, the rates didn't gradually go higher over a decade. They stalled and stalled and stalled, and then they had to play catch up. They could have done it over a decade and it would have been much smoother. But nobody wants rising interest rates. Well, we're there. Along with rising interest rates is going to go rising commodity prices. It's just the place of the cycle we're in, and people need to understand it's not a choice. It's not something that we can suddenly decide we're going to change. We are entering a period where there is going to be an awful lot more demand for commodities, not just for people to feed themselves, but also to stockpile. If the Ukraine-Russia thing has shown one thing, it's that you better have stockpiles of energy, you better have stockpiles of food, because something could happen that's completely unpredictable and unexpected that changes everything. So, I think gold will be a big part of this. I think there will be, again, a cyclical change in a term of people rejecting fake fiat money and wanting real money, which is gold. And to some people, crypto, that's their choice. Some people believe that to be real money. That's absolutely fine. I've got no problem with that. But yeah, this idea of a transition from the age of the virtual to the age of the virtuous is a really simple but effective way of thinking about it, I think. And that means higher for longer.
Yeah, no, absolutely. Grant, maybe before we sort of wind down completely, we've been talking about many different topics and taking you in many different directions. Is there anything you feel that we may have missed that you think right now is also quite topical that you want to kind of bring up before we wind down?
Oh boy, look, I guess the beauty and the frustration of the times we live in right now is that by the time we hang up the microphone and you edit this and put it out tomorrow, whenever you put it out, there'll be 5 things that we could have spoken about. I will say one thing that's worth talking about, and this is kind of a bee I've had in my bonnet for some considerable amount of time, and some people think it's frivolous, some people think it's funny, I don't know, but that's the fate and the fortune of Elon Musk. I think this is important because it's not about Tesla, it's not about SpaceX, it's not even about Musk himself, it's about confidence. You brought up Cathie Wood earlier on, and she's become the poster child for this phenomenon in the investment industry. But Elon Musk represents something much bigger. Elon Musk was this guy, this crazy, brilliant guy who was changing the world and doing all these good things for society. And you can see what's happening with his narrative arc. There were plenty of skeptics about it, myself included, who didn't believe the hype, didn't buy into all of it, and would gladly point out many of the places where the common narrative was flawed, to be met by a torrent of abuse from people that just wouldn't have it, that this guy could be anything other than the potential savior of society, who's going to lead us to Mars and do all these wonderful things. And my friend Peter Atwater talks about this, the importance of confidence, and nowhere has this been more manifest than in the confidence in Elon Musk. And if you're paying attention to the Musk story and you see what's happened with the Twitter takeover and now these kind of allegations that are being made against him, his kind of separation from the Democratic Party and his move to the Republican Party, there is something dramatic happening with Elon Musk. His standing in the public conscious is changing, and it's happening right in front of our very eyes. And so when you read stories about Elon Musk, try to step back from them and understand what they're saying in the broader sense, is that this great showman to some, this great charlatan to many, the public perception is shifting more from showman gently at first towards charlatan. And I think that's such a huge symbol for the shift in the times we're seeing, where someone like Musk, who encapsulated everything that the era that we've just gone through was about, right? He was about being bold and reckless and ignoring rules and, writing his own script. And his company was the embodiment of everything that zero cost of capital represented. You could burn through cash for years and no one really care. They'd still give you the benefit of the doubt as long as you're doing wonderful things. Not so much anymore, right? Things are going to have to mean something again. And the promise of self-driving cars that you got away with for year after year after year, your feet are going to be held to the fire suddenly, because people want real. They don't want virtual. They don't want fake anymore. I want a real self-driving car. And why haven't you delivered it to me? So I would say watch Elon Musk. And I'm on record as being a huge skeptic of this. This isn't me just saying, banging the same drum. I think the tide is turning around him. And I think as the tide turns around him, it's a tremendous clue as to how the broader times are changing. And if the times are changing and people are repudiating Elon Musk and everything he stands for, you can take that on a broader society level and understand what does that mean for the things that will be repudiated in society. And it will be showmanship, and it will be braggadocio, and it will be ego and hubris, and all these things that markets going one way have fostered. That's going to change, and it comes back to what's real. Right? Commodities are the antithesis of everything that Elon Musk stands for. This is pulling stuff out the ground with your bare hands and getting dirt on your fingers and putting them in a warehouse. So I think that story bears watching in the broader context, because I think as goes Elon Musk, then so goes society.
I'm so glad you brought that up, because I know you're a true gentleman, and you're very cautious usually, is how I perceive you when I listen to you. Usually to be too kind of controversial in some sense. So I'm actually glad that you brought this up. No doubt there will be an Elon Gate at some point, for sure. And I'm glad you mentioned that here, even though it might fill up our Twitter feeds with a few extra tweets, not so nice tweets, maybe. Who knows? Well,
it might do. But again, Neil, what's interesting is if you read the response now to tweets about Elon, mm-hmm. there are a lot more people who are not so keen to defend him anymore. And like I said, this isn't about Elon. It's about who he is in society and what he represents. And I think that the shift in sentiment around him is just going to be a very important signal for people to follow within the confines of everything we've spoken about in the last hour and change.
Yeah. No, that's perfect framing. Grant, this has been an unbelievable conversation. Thank you so much for doing this today. We thoroughly enjoyed it, and I'm sure our listeners will as well. And before we go, let me just encourage everyone to follow and subscribe to the amazing content that Grant produces. I will, of course, put links in the show notes for today, because as you can tell from today's conversation, we are living in a truly global macro-driven world, and it is perhaps more important than ever before to stay well-informed. From Jem and me, thanks so much for listening, and we look forward to being back as we continue our Global Macro series. And in the meantime, take care of yourself and take care of each other.
Thanks for listening to Top Traders Unplugged. If you feel you learned something of value from today's episode, the best way to stay updated is to go on over to iTunes and subscribe to the show so that you'll be sure to get all the new episodes as they're released. We have some amazing guests lined up for you, and to ensure our show continues to grow, please leave us an honest rating and review in iTunes. It only takes a minute, and it's the best way to show us you love the podcast. We'll see you next time on Top Traders Unplugged.